Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to get into everything happening with AMC stock today. At the time of recording this video, AMC stock is up over 2% here on the day today at $4.17 per share. So today is a green day, a much needed green day at that. But coming next week, well, if you thought this week was something, next week is really going to be the real deal. Now, we're going to talk about earnings coming out next week, as well as what is going to happen. You're more than likely, odds are good, going to see the yield, like over 50% good, that you're going to see the yield curve uninvert next week. Now, what does that mean? What are the implications? And of course, what do you need to know? Hit the like button as well as subscribe to the channel. That's what you need to know. First things first, before you do anything, and costs you nothing, and it's absolutely free 99. So first up, AMC stock having a great day today. Let's actually start with what's going to be happening next week. And then get into more so what's happening today. So if we look at the earnings calendar for next week, some big guys that are reporting, okay, heavy hitters to even start off the week. You have SoFi pre-market. I know a lot of you guys are probably in SoFi. Some of you guys might not be, but I know a lot of people are. SoFi is going to be a big one for small mid-cap stocks, really one of the first notable small mid-cap stocks that will be reporting earnings. And then the holy grail, the holy freaking grail, super micro. Wow. Yeah, SMCI. This is the number one component of the Russell 2000. SMCI is up 70% to start 2024. The stock has lost its gorge, okay? Absolutely insane. This stock has went from, in 2022, $30 per share to, at the time of recording this video, $477 per share. This thing is off the chain. Okay, now for good reason, I guess. It was really a stock that was down and out for a while. And this thing can move big following earnings, and they typically do. Following the last AI hopium, whatever you want to call it, SMCI fell over 23% the day after earnings. Now, they report Monday and after hours. The chip sector is a big component of our markets these days. It's vitally important to where the markets go from here. So if the chips give up, if the chips start acting up, that's going to be some bad news. Now, CLAC is another chip name that has been going absolutely parabolic. And yeah, they are down about $36 here today, about 5.5% following their poor results. So that's definitely going to be a big story coming next week, just to start off the week. Not to mention all the other names that will be reporting earnings. So Monday pre-market, Pfizer, GM, UPS, JetBlue, Marathon, MSCI, HCA, Pulte Group, bunch of other stocks there. Tuesday after hours, Microsoft, AMD, Alphabet, Starbucks. So Monday and Tuesday, you're going to get the chip sector, the rest of them, Intel, guided for pretty bad numbers. If you also see something similar here, I believe Supermicro could fall over 30%. I believe AMD could fall over 15% on bad earnings. Now, even on good earnings, just good earnings, Supermicro could still fall 10+%. AMD could still fall 4-5+%. Because you've ran up that much in 2024. Just to start the year, a month into the new year, these stocks are up 50+% for most of them. So I think that could be a weak spot in the week ahead. Not even because I think they're going to have bad earnings, because they've already run up so much. They've already priced in good earnings. And the give back of that could be pretty brutal. And then again, your $1 trillion+ companies, Microsoft and Alphabet, those will obviously be important and move a lot of your other stocks that report earnings later in the week. On Wednesday, you'll get Boeing, Novo Nordisk, shout out Ozempic, Phillips 66, Roper Technologies, MasterCard, Thermo Fisher, Boston Scientific, and MI Homes. Wednesday after hours, Qualcomm, Corteva, Align, Wolfspeed, Aflac, Century, Nextracker, MetLife, and Meritage Homes. Thursday, pre-market, Altria, Royal Caribbean. Royal Caribbean was actually one of the best performing stocks last year in the S&P 500, so pretty interesting. Merck, Sirius XM, Cardinal Health, Honeywell, Tractor Supply Co., and Stanley Black & Decker. Thursday after hours, the next big day of earnings, Apple, Amazon, Meta, United States Steel, Clorox, Skechers, Decker Brands, shout out Uggs, Microchip. And then Friday, you're going to have a bunch of oil names as well as some healthcare names like AbbVie, Cigna, Regeneron. I've actually held AbbVie for since 2019. That has been a beautiful stock over the years. Shout out Botox and Humira for that one. So nonetheless, yeah, it's going to be a huge week next week as far as earnings. A vast majority of your S&P 500 will be reporting coming next week. And these are just some of the larger names. There is many other names here that will report next week that are not on this list. These are just the biggest of the biggest companies, the ones that are important. And yeah, super micro, baby. Oh my gosh, that one is going to be insane. Literally wild. So yeah, let me know what you guys think about those earnings down below in the comment section. Now, really what's going to be happening next week as well, you're also going to get the Fed. Now, the Fed is going to be on January 31st. Now, I talked about this a little bit at the end of the last video. The last video was on the long side, so a lot of you guys probably did not see this. But the Fed will be happening January 31st. That is going to be next, let's see. That's going to be next Wednesday. So if you're looking at the earnings calendar, that's going to be between Microsoft, Google, AMD on Tuesday, and then Apple, Amazon, Meta on Thursday. So midweek, oh boy. Yeah, it's going to be a crazy week nonetheless. But midweek, you will get the Fed. Now, markets are currently not pricing in a rate cut for March anymore. So that's actually pretty good. The Fed is probably going to fully confirm that they don't plan on cutting rates in March, probably by May, if not June. That's what the Fed is going to televise. I think that could be somewhat negative because the markets are pretty firmly expecting a rate cut by May, with odds currently sitting at 51.3%. Yeah, if the Fed were to say like second half of the year, then that would obviously be bad for rate cuts. The thing that I really want to highlight, though, is the yield curve. Now, specifically, quantitative easing, or at least not running off the balance sheet as much as they previously were. I wrote this post here on X, and it's from the Federal Reserve on January 24th. They are ending the Bank Term Funding Program. Now, this has to do with bonds and banks that bought bonds because essentially they were forced to. The government put banks in the situation. Like, banks failed, not necessarily because of their fault, more or less, but these banks failed back in March because people were given trillions of dollars. It had to go into banks, and some banks bought 10, 20-year bonds. That's just it. Some banks bought long duration bonds and didn't hedge with short duration bonds, or didn't hedge, via other ways. Some banks, bought the opposite. Some banks, hedged with longer term bonds, and they bought shorter term bonds, like a JP Morgan. That's why JP Morgan's doing better than Bank of America or Citi, because, they were on the right side of the trade. But nonetheless, the Fed has been running off $90 billion of worth of bonds, $60 billion worth of specifically treasuries every single month. If the Fed were to end that would cause yields to fall. Now, theoretically, in a perfect world, you would see 10-year bonds or 2-year bonds, their yields fall more than 10-year bonds. You would, go back to somewhat of a normalized yield curve. Now, that's where this comes into play. The 10 and the 2-year yield curve inversion. It's only inverted 14 basis points. So, one strong day for, 10-year yields maybe staying higher and 2-year yields actually falling would cause this to uninvert. Now, historically, since 1950, the yield curve being negative has predicted every single recession you have ever seen. Now, it's not that you go into a recession when the yield curve is inverted. No, you normally, now sometimes you go into a recession like right after you invert, but normally it's about 5 months before you go into a recession. So normally you do see markets start to pull back right at about the time you go positive on the yield curve, if not shortly after. And once you're obviously in a recession, that's where you get the larger pullback. But if you start to go positive, if you actually go positive coming next week, which I think is over a 50% chance that we do, because of the Fed, and specifically if they end quantitative tightening or at least slow that down a lot, yeah, you could be in for some marketable downside in our markets, considering stocks are trading at all-time highs. So keep that in mind. I think that's going to be very interesting coming next week. Overall, going to be a crazy week. You guys better enjoy the hell out of this weekend because you're going to be busy coming next week, that's for sure. 10-year treasury yields are up about 2 basis points here on the day today. Really not a whole lot of notable news. We went over the news in the last video. You did have personal spending come in almost 100% higher than expectations. Personal income came in line with expectations, and PCE data came in line with expectations. So not a whole lot that's actually happening today, but you are seeing a little bit of the bubble kind of popping for some of your semiconductor companies. And that's what's going to make SMCI earnings, next week so vital, so important for that overall sector, for Nvidia, for SMCI, for all of the other stocks like Intel that already reported not so hot numbers. Everyone's so giddy on, AI, and these companies, they're not reporting any AI related numbers to go alongside the stock price rises that you have seen. Now, if you look at AMC is up about 3% here on the day today. Let's take a look here at the Ortex data. And for the Ortex data, you do have 10.47% short interest of free float, $107.04 million worth of short positions currently. Days to cover 1.39, 26.23 million shares currently sold short, 23.53 million shares currently out on loan, cost to borrow at 1.07%, utilization at 35.56%, and a short score of 58.29 out of 100. So some pretty solid numbers here. Option activity here on the day today, you're not getting anything from hedge funds or institutions. What's interesting though is the volume has flipped. So now the call volume today is 42.51%. The put volume is actually winning here at 57.49%. So that's interesting. You don't see that all the time, where there's more puts being bought than calls on any given day. But then again, AMC stock is up 3%, and it's not every day that AMC stock is even up 3% for a given day. But again, no activity so far from hedge funds and institutional investors. So there is that. Stonko tracker data, it looks like about 10,000 calls are going to expire in the money. 82,000 are going to expire out the money. About 20,000 puts in the money and 20,000 puts that are out of the money as well. Again, stock twits, you're looking pretty dang good over here. Sentiment is at 90. That's an improvement, big improvement from 40 as of yesterday. So people are extremely bullish. Message volume at 48, lower than yesterday's number of 51, but still in a normal range. And the participation ratio has been increasing, now at 47. So I don't know where we ultimately go from here. AMC stock is still very oversold with an RSI of 28.09. You're really bottoming out here. Maybe you are finding a bottom just above $4 per share, but I think next week is going to either confirm, that the bottom is in, or, well, markets have a long way to fall. Thus, AMC also would have a long way to fall. S&P 500 hitting a new all-time high today does not set us up very favorably for all of next week's earnings, as well as the Fed. And we still are going to have some economic data next week as well. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.